Hi, my name is Greg. I've been in the debt settlement industry since 1999. The purpose of this video is to tell you some things, if you're looking for help with your current debt situation, that you need to know that may be contrary to what you'll hear. So this is simply to provide you with some accurate information. First, if you're looking for help, there's a couple of ways to resolve your debt. You can continue paying the way that you've been paying, which isn't working for most of you. There are nonprofit credit card counseling services, and there's debt settlement. Of course, there's always bankruptcy as a last resort option. Let me tell you about credit counseling services. Credit counseling services are any nonprofit organization. What they will typically tell you is that it looks good on your credit because you're making your payments on time, and they'll usually put you on about a 48-month program. First thing you want to do is break out a calculator, multiply the total monthly payment that they tell you times the number of months that you'll be in their program. Make sure that that number is at least what you owe in total debt. More often than not, it's going to be less or very close. Remember, these companies charge low monthly fees. They will not reduce your interest to zero. The reason for that is pretty simple. They get paid back from the creditors by way of donation based on what they collect from you. What the creditor pays them or donates will be written off as a collection fee. So, you want to make sure that the numbers work out. Do the math, multiply how much the monthly payment is times the number of months, and make sure it's reasonable, at least what you owe in total. Second thing, like I said, they will tell you that it'll look good on your credit because you're making your payments on time. Truth of the matter is, you are no longer the payer on those accounts, they are the payer on those accounts. And although they will not report to the credit bureaus, your creditors will report that the payments are being made by a debt management organization, which is typically viewed about on the same scale as having a bankruptcy. So, it stinks. I'm not here to tell you that anything else we're going to discuss doesn't stink also. Next option, debt settlement. Debt settlement, you'll find several different business models. A self-saving model, where you save the money in your own bank account. You'll pay the creditors directly based on a negotiated settlement. Trust account models. Your money will be pooled in a trust account with other people. It might be your own trust account, but money's going to be pooled together so that they can try to get a bulk settlement. The negative aspect of this is when your money is bulked or grouped together, let's say they're going to settle with one of your creditors and they're going to do a bulk settlement at 40%. Well, there could be a very good likelihood that they could settle your individual account for 8 or 15%. You'll never find that out because you're going ahead and saying, look, take whatever settlement you can get. As long as it's 40%, I'll pay it. The other model is performance-based models. A lot of attorney models work this way. Now, a lot of people think, well, creditors have an attorney on their side, I should have an attorney on my side. Truth of the matter is, most of those attorneys are not licensed in your state. So you get a California-based attorney model. You are in Florida. That attorney not being licensed in Florida really can't represent you. Wouldn't matter if they were in Florida. Remember, when you're in debt settlement, you have to make the independent decision to stop paying your creditors. The settlement company can't tell you not to pay your creditors. That's telling you to break the contract. You have to make the independent decision to stop paying your creditors monthly. Why? Not to bully the creditors. Creditors settle debt for one simple reason, because it makes business sense to them. When you stop paying them, they get to show that loss as a cost of doing business. So they write the money off, and then they're going to get cash from you in settlement. So we're not going to bully them. What you will hear in the industry is, if you ask the question, why would the creditors settle, the answer you'll typically get is that if they don't settle, you'll file bankruptcy and they'll get nothing. Furthest thing from the truth. With the changes in the bankruptcy laws, if you file bankruptcy, more than likely you're going to have to file a Chapter 13. Through a Chapter 13, you're going to pay back a portion of the debt, typically over a 5-year period, through a trustee of the court. The creditors are going to get some money. Debt settlement doesn't work because you bully the creditors. It works because it's business 101. They write off the loss, they get cash from you. How do they write off the loss? You have to make the independent decision to stop paying them monthly. Why? So they can show that loss. Performance-based companies, attorney models do this quite often. They typically will charge you about an 8 to 10% retainer, and then they charge you based on what they save you. Their big selling point is, well, look, if we don't do our job and get you a better settlement, then we don't earn so much. truth of the matter is that debt is like wine. With age it gets better. So what happens is these companies have an incentive to bring your debt out as far as they can so that the settlements are better, they earn more money. When you're with a company that charges a flat fee, example, you'll see it across the industry, 15%. That's what they're going to make. If you're there for 20 months or 40 months, they're going to earn 15% of your debt as a fee. What's their incentive? Their incentive is if they quote you at 40% settlements and they get you a 20% settlement, they've cut your settlements in half. Cutting your settlements in half typically will cut your program in half, so a 40-month program would cut down to 20 months. The benefit to the company is they don't have to service you for the next 20 months. Cuts their overhead. There's their incentive. So, what you need to be told are several things. First, you have to make the independent decision to stop paying your creditors. That you can be sued. This is a litigious society. Your neighbor could sue you because your grass is too tall. The big concern people have with lawsuits is not actually the judgment, which is a simple piece of paper that says you owe money. We already know you owe the money. The thing that scares people is the enforcement of a judgment. Judgments can be enforced three ways: lien on personal property, seizure of bank accounts, and garnishment of wages. Some states you cannot be garnished in. Some are very difficult to garnish in. Some have caps of 10 or 15% garnishment of your gross monthly income. Others have a 25% gross monthly income garnishment. Nothing I'm telling you now is to be construed as legal advice, so please don't take it that way. And the other things we talk about aren't to be construed as accounting advice. Talk to an accountant, talk to an attorney about those things. However, you can be sued. And if there's a judgment, what does that mean? It means they're going to need to enforce the judgment in order to get paid on it. If you have one property and they're not planning on selling that property, putting a lien on that property doesn't do them a lot of good. They will still settle that debt because it only works for them if you sell the property. Seizure of bank accounts. If you're in a non-community property state, it may make sense for you to move the money to your spouse's account so you don't have to worry about them seizing your money. If you're in a community property state, you may want to investigate what's called a load card. It's a place for you to put your money that's pretty safe. Again, we talked about garnishment of wages. A lot of states it's very difficult to do that in. Now, taxes. What about the amount forgiven? Let's say I have $10,000 in debt, settles for $4,000. Can I be taxed on that $6,000 difference? The answer is yes. Now, again, not giving accounting advice. However, most people that go into a debt settlement program can show for the purposes of taxation that they are insolvent. What that means is basically you have more debt than you have assets. I'd talk to my accountant if I were you, but there's a tax form 982 that is designed to offset any tax liability incurred due to the discharge of indebtedness. What does that mean? Well, what it means is you may not have to pay the taxes on it, but let's say you did. Look, being in debt stinks, getting out of debt stinks, credit counseling stinks, debt settlement stinks. Okay, so now that we know that, what we really have to look at is you're financially ill. There's some medicine you have to take. If you're going to be ill for any length of time due to the medicine that you have to take, we know you'll get better. So, do you want to shorten that time frame or keep it as long as possible? I imagine you want to keep it short. Debt settlement is a way to shorten that time frame. That's it. That's the only thing good about it, is it shortens the time that you're financially sick. Get you back on the road to recovery. So, let's say you had to pay $4,000 on that settlement we talked about. You're going to pay dollar for dollar taxes on the $6,000 that were forgiven. Okay, so now you've paid $10,000 on the $10,000 that you owe. All right. Is there anything that comes close to that? Paying the way that you're paying, you'll pay several times what you owe in interest. If you go with the credit counseling service, you're going to pay 100% of the debt, some fees, and some interest. If you file bankruptcy and you file a Chapter 13, okay, you won't pay back the full amount of the debt. But you'll have a bankruptcy and it'll be over a 5-year period, and if you miss one payment, they'll kick you out of the bankruptcy. So, worst case scenario, debt settlement, you pay 100% of the debt, you don't pay any interest on it. Alright, again, I'm not saying it's good, it stinks. However, it just stinks for less time. Any company you talk to, check with the Better Business Bureau, make sure that they have a good rating. Make sure the person on the phone with you, no matter who it is you talk to, tells you the things that I've told you. Because if they haven't, they're lying by omission. Look, there are several good companies out there. I'm not claiming who I'm with. Doesn't matter. I don't care where you get the help as long as you get the help. But make sure they're telling you the truth. You catch them in one lie, don't give them a chance to clean it up. They lie to you once by omission or by lying to you, they're going to lie to you again when you really need them. Look, it's going to be a rocky road, there's going to be some storm to weather, but if you can deal with that, knowing you're going to get some phone calls, no one can stop it. Collectors can't call you after they've been cease and desisted, but they may anyway. Prepare yourself for that. Understand that it's going to be a little bit of a rocky road, but when you're done, once you've weathered the storm, you're going to get to the rainbow, and with that settlement, no matter what you hear in the industry, or what you hear from anybody, it's going to get you there in the shortest time possible. I hope this helps.